80, but we are already back at 83.20 roughly. Cable pushed up into the 136s, but it's now trading lower as well.
So what do you do? What are you doing in here?
Well, I'm looking at a euro sterling put because I thought there would be like a clear divergence between Bank of England and ECB, which apparently there is, but it's not materializing right now. There may be some second round if Lagarde stays dovish, but I don't have anything like live or cash on sterling.
Your view on yen? You know, it was starting to look pretty bad yesterday. Held where it had to.
Yeah, it held on the feed that I showed yesterday in the room, and then we had a few comments from Wakatabe overnight saying that they are not ready to change anything, that it's all way too early, and clearly showing they will stay behind all the rest of the central banks. And it started to recuperate from then, and then I think the rest is more crosses than dollar yen, in my opinion anyway. The dollar recouped versus a lot of currencies initially. So
would you be buying yen crosses here, and if so, which ones?
That's a good question. I think
that's what I do, bro.
The tool which may come out best of on the back of the central banks is I don't know, perhaps the commodities. I don't know, something TV or.
Ryan, what do you think here, bro? I think I heard you back there. Estelle is here.
Yeah.
All you guys. So Kman, I can tell when people have conviction and people don't.
Yeah.
They become reporters. Describing the play-by-play, and I'm wondering if you guys have some conviction about what's going on here and how you would, play it. Are you looking to buy this dip in euro, thinking there's more upside?
Yeah, I would have liked a bigger dip. What Kay said is absolutely right. I think the market is now really saying to Lagarde and all her crew, you've trotted out this excuse time after time after time. Meanwhile, you're printing record inflation. So it's that situation where the market is starting to test the resolve of the ECB. We got a nothing dip, 20 pips, and we're right back again. That.
Ryan, did you put in this floor in euro pound? Was it on the tape that?
I wish I was. Yeah, can you hear me?
Yeah, I could hear you.
Yeah. How long have I been looking for that level 75.80? Or
look at this divergence. I mean, it's really compressing.
Yeah, I was looking. I was in two minds. If we got big news, we'd flush those that 2019-2020 double bottom at 82.75, but it didn't. So I didn't get anything away. I'm yet to see whether that low's now been done and we're dusted and it's upside from here, but there's plenty more water to go under the bridge. We'll wait and see what Lagarde says. We could still get another nudge down there. I think as we say, the egg's been broken at 83 now. The big figure and everything around there has been cracked. So
Humpty Dumpty, EG. Yeah. All right. So we'll see. I think it still has to prove itself. You're right. A 2-week reversal with 1 day left. I don't know if it's possible. 83.69. It's possible.
Yeah, definitely. Yeah.
Tomorrow's NFP on top of this, so
yeah,
the whole world's looking for a bad number, especially after ADP.
Yeah, but
what if we got a good number?
Well, that'll be the risk because everyone's now looking at a bad number, so it'll be a shock. But a quick interesting thing, I watched the Challenger Gray layoffs report, and it wasn't anything huge, 19,000, but it showed how many layoffs potentially are coming from people who refuse to jab, which is obviously going to be a big thing over the months ahead because it's jabs for jobs or whatever you call it. And there was 5,757 who potentially lost their jobs because they refused a jab. Not huge, but it's something that could feature moving forward.
Then my stepson left his job to go from Cisco to Atari because he didn't want to get the shot, and he had a big job. he ended up with a bigger job. But I've never been confronted with a decision like that in my lifetime, where I'd have to leave a job for over something like that. Really,
but that tells a story in itself, that he can leave a job so easily and get another one so easily.
That's true. That's true. Yeah, definitely a good time to look for work. If you want to work, it's out there, man.
Yeah, it can't be out of the job market.
So Facebook, I want to show I covered my Facebook puts this morning still.
Did you have puts?
I'm kidding you.
Oh, man.
That was my fantasy, anyway. So, I want to know what you guys think, because, we PayPal dumped the day before. Kramer was crying, and Facebook, and the week before Netflix. I mean, all of these big caps, or it explodes to the upside like Google did. But, to have a 20% move on a mega cap, it's not a $5 stock where you could have a 10-20% move. I think it speaks to a problem with market structure.
Yeah.
That we're having this kind of, that they could take that much market cap away on one earnings report.
Too much short-term thinking, you think?
I just think it's kind of fragile, or it's not liquid. Or there's just no one to, when it's bad, there's no bids, or when it's good, there's no offers. So I don't know, just I've never seen anything like this.
They've become too big to fail now. It used to be the banks. Now we have other companies.
Yeah.
Yeah.
So Stell still looks right to have, be patient. You think it's going to happen around the Fed meeting? We should be close to targets.
I don't know. That's my guess. But yeah, the metals are not trading well. We've said it for a while. And yes, they do have their odd day of outperformance, but you zoom out, gold is doing better than silver. We know that. Silver is gold on steroids, and it always has been, always will be. But
the gold silver ratio looks like it wants a new high here. Yep.
So we wait. We look at something else. Yeah.
Yeah.
Look at something else.
I mean, yeah. So
that
means just setting up. I don't think we're more than a month away. So
yeah.
If when there's setups that could probably make your year, what's the difference if you have to sit on your hands for
I wrote exactly. I wrote on the chat room, I think we're going to test gold 1680 to 1700 and silver probably 19.5, 20, low 20s maybe. If we get there, I know it's big words to say. If we get there, I think it's going to be these lows we will never see ever again in silver. Anyway, we wait. So meanwhile, we look at other stuff. I was actually shocked today by the Bank of England. I saw the split 5-4. I'm like, oh my God, that was close. And then I realized the 4 were voting for 50. So that's pretty hawkish. And they've started tightening now. Tightening, I mean quantitative tightening. So they're going to be letting. As the bonds mature, is it 875 billion pounds? They're going to let that mature, so that's going to be declining, and then they're going to be selling corporate bonds, and that's going to take them until end of 23, I think, or something like that. Anyway, I have to look at the details. But basically, the Bank of England was as hawkish as probably they could be,
and Cable's given it all back.
Yeah. I mean,
Paul Landon, nice trade. I saw your comment.
Yeah, and by the way, I'm just stepping in. But why do you think that we're reversing here? And good morning, everybody. Why do you think we're reversing here in the sterling?
Because it was a corrective bounce.
He's made it clear
that
they're increasing rates on inflation. He one of the lines they said is we face increased inflation with a weakening economy. That's stagflation. What we've been talking about for months, and he's openly admitted it. So, it's not a hike that's going into a strong economy as you'd expect. He's admitting it's going into a weak economy, and all you're going to do is make it weaker. That's sterling positive.
What they're saying is they're going, we'll accept a recession to get a hold of inflation.
Yeah, they're going to say we're going to drive in, we're going to head towards
build the economy. Yeah,
we're going to drive towards a wall in a car, but we're not going to turn the wheel and get out of the way. We're going to just plow on.
The problem is that you read that
Brian's a graphic guy, isn't he?
you read that
I'm in the back seat.
Right.
you saw that UK energy price is going to go up like 50% or something like that.
Jeez.
So you have energy prices going higher, which basically drive everything. And how are the Bank of England fighting that? Well, they're deciding to tighten monetary conditions, which means they're going to eventually raise unemployment and the cost of doing anything. So really, you want to fight that by killing your economy.
Yeah,
That doesn't really make sense.
That's their only tool.
That's their only tool, exactly.
If you haven't got money, you can't buy energy, can you? That solves inflation in one hit.
And my heater went out last night, guys. I'm sitting here wrapped up in an electric blanket. Coldest night. It was cold last night, wasn't it, Blake?
Yeah, it's pretty cold over here. Yeah. So that stinks.
80 degrees.
But what does that have to do with the Bank of England? I'm sorry.
It has more to do with Putin. I think Putin cut off my. he had
Got
to,
it,
man.
So, I stepped in a little earlier. I was turning on the webinar when you were talking about the euro sterling. It cracked the egg, if you will, through the weekly 83 pence level. But as I said in the chat room, Ryan, when I'm looking at a weekly chart, I'm looking at these big levels, and we probe. That to me is like really cool. Actually, it's kind of like the when we had this conversation about the euro dollar probing below lows, getting everybody just imagine all the stops that were triggered in the euro sterling below 83 pence, and here we are popping back up. Then if we have a hawkish or more hawkish ECB, I mean, in the euro sterling, let's just arguments aside, and let's just say just imagine this. If we close at the highs today in the euro sterling after probing 83, I would actually be long that, looking for 84 plus after that. Because it shook out when days like today that shake out everybody who's may have been long, that had their stops just nestled below these lows. They got stopped out. They're going to be like, crap. They're going to want to get back in. Everybody's going to know that was just a stop run. And so if you're watching the euro sterling, you just have to see how it closes today. If we close near the highs, I mean, that's a pretty good reversal indication, especially if you look at the weekly, levels holding. So anyway, that's just my.
I was just being a bit more, obviously, because I'm looking to get out some of my shorts. So I was looking more specifically at those lows around that 2019, 2020, which is down to 75. It goes 75, 80. Those two lows on the weekly.
Got it. You're talking about these lows over here.
Those ones I've been watching forever, and we got to what, 84?
Yeah, we got pretty close. And you're going to try to squeeze out every pip, aren't you?
Oh, definitely.
All right. All right. Well, hey, so how are you guys feeling about the ECB today?
Just pretty much, as I said earlier, that she's trotting out the same old lines. There's been some tiny tweaks to the QE going forward, but it's the same old lines. Inflation's going to drop back. We're not ready to hike. Blah blah blah. And the market's going, okay, well, we're seeing inflation at record highs. We're going to put you to the test, and that's why we've seen a reaction so far. 20 pip drop in euro dollar. It's a sneeze. It's nothing.
Right.
So let's see what she does. She could change her tone and say, "Oh, yes, perhaps we are a bit more concerned about inflation." Anything like that, boom, we're shooting up.
Okay. Now, Stella, since you're in Greece and you have the European CPI, Eurozone CPI is running so hot. How is the inflationary pressures in Greece? Have you guys? I mean, everything here, like where I live, everything's 20-30% higher, and whatever it is, it doesn't matter whatever it is. Whether it's milk or you're getting your car washed or you're buying some shoes, everything's 20 to 30% higher, roughly, is it from a consumer standpoint? How about you guys?
Yeah, you're seeing it everywhere, and not just energy, which is direct. We have natural gas in our home for heating. That's gone up. We see it straight away in the bill. I mean, there's nothing we can do about that because that comes from Russia or wherever we're getting it from. But products, everything, supermarkets, you get shrinkflation. It's here. You can see it, and disposable income is going down for the average household. That's a worrying part. And obviously wages, especially in countries like here, they're just static. They're not going up. So it's a very difficult situation because inflation is very real. And I tell you, it's not 2%. It's quite a bit higher than that. So
yeah.
Yeah.
Well, I guess the flip side to the inflationary problems that we've had in the US versus globally. And this is like one of the bigger issues, I guess, as a whole, in the United States, at least through the COVID, crisis, some of the, you could say the general public, if you will, the average American, their coffers were stuffed a little bit with the, with all the stimulus checks and everything else. You could argue that that's, whether it's spent or invested in Bitcoin, 20,000 points ago or whatever it is. But at least in the US, we were provided some stimulus as a country. Like if you what kind of stimulus payments did you guys receive in Europe?
None.
Right.
I didn't.
Right.
Yeah.
Right. So, and the majority of Americans did. And I think that's where the difference is, where, you're like, oh, the average household income is maybe coming down, or maybe their savings rate, at least the United States has had some cushion, but that's not going to last forever either. As we're a year and a half, 2 years into the pandemic, that's going to end up being a concern for the U.S. as well. It's making sure that wages can keep up with, the pace of inflation. Now, I look at the euro dollar just kind of technically, and I just want to talk this out. If you guys did not know, if you're a ForexAnalytix subscriber, you knew that the pattern in play was closed yesterday in the euro dollar long, but and everybody that's a ForexAnalytix subscriber also knows that I closed out personally my euro dollar longs yesterday at like 113.20. I am looking to reestablish those longs. I'm hoping that the ECB is not super hawkish, but what I'm fearful of at this point in time is that Lagarde is going to be, more hawkish, and that's going to feed into that narrative. And I'm going to have to chase the euro dollar higher. I might, end up getting a better price than what I had yesterday sold at, because I sold at 113.20 roughly. If I end up buying below that, that's fine. But we might actually have to chase the euro higher. And what are your guys' thoughts about the euro price action right now?
Good question. You know me. I think the euro is. Being long the euro is going to be the trade for this year. I might be wrong, obviously, but I think that's what's going to happen. So I will be a buyer of euro versus pound and dollars, because I think that there's only for so long that the Lagarde can actually ignore inflation. I mean, they've been trying hard, and the inflation is going higher and higher, and it's just impossible to ignore now. They're saying, oh, it's transitory, it's going to come down. Well, even with their staff projections now, they're still projecting it's going to come down to 2%, which is their target. So I think eventually, and I think it's not going to be very, far from now. I think, a month down the line or something like that, they're going to start becoming a lot less dovish, and that's when the market's going to start moving. So that's why I really like euro longs, this year. So any kind of dip, pound against the pound and the dollar, I like buying.
Yeah, I've got some bids in the euro lower prices. On the morning edge, the morning edge and the daily roundup yesterday for the ForexAnalytix traders. They know where I'm trying to stake my claim on the euro dollar on longs. But yeah, it'll be interesting to see what the European Central Bank does today. And going back to you guys' conversation about precious metals, I want to point this out with gold. Gold's got this like we had this big pivot on at 18, like 1810. I can't tell you how many times if you go to, this is our bias chart that we do on the Morning Edge webinar, which is, in about 45 minutes from now, go through all these instruments and, get our analysis done. And I can't tell you how many times over the last few months I've written down 1810, which has been a real big pivotal area in gold. Matter of fact,
bear flag, right, Blake?
Yeah, it's a pennant right now. You can see I wrote it even yesterday at 1810. Okay. It's been a huge pivot for price, and I don't know why, but if you really narrow it down to a symmetrical triangle that which I think we're in, it happens to be smack dab in the middle of the triangle. So I guess it's very interesting where I think gold, even following the non-farm, I just hit my microphone on accident. Following the non-farm payroll on Friday, maybe that's what gets gold out of this, massive range. But this triangle, excuse me. I actually think gold is going to be one of the more explosive moves. Now, whether it's bullish or bearish, I don't know. Everybody is a gold bull, which makes me think that we could actually see some weakness first before a rally. But I'm not going to put past gold, like a break above 1850 would be extremely bullish. A break below 1775 would be very bearish, at least near term. But I think gold's setting up where we could actually move quite aggressively, after Friday. So I think this should be on everybody's radar going into the non-farm payrolls this week. So anyway, just some food for thought there.
If I may, a quick word on the euro and on those central bank meetings. I don't know if you noticed, but over the central bank lot that we had so far, the press conferences were never exactly like the statement was. Whether it be RBA or
excuse me,
the FOMC or all the ones that we had, Bank of Canada and now the Bank of England trying to downplay the rate hikes. The presses have never been like the statement was. So maybe Lagarde is going to be hawkish after all of the press conference starting in a few minutes.
Yeah. So how did you read the ECB statement that came out?
The statement itself is still dovish compared to all the other central banks.
Yeah, and so
changed just like in the last paragraph a word also that rates they left out that rates can go either way, but we know that rates are only going to go up with such inflation. The other thing about ECB, and that's looking forward, of course, is that beginning of March they are ahead of the FOMC and they will have staff projections in it. So maybe that's what Lagarde is waiting for to really change tone. It might be. I'm just saying.
There's some great observations, Kman. And by the way, good morning, because I haven't said good morning to you. Yeah. You had the FOMC, which is very similar, right? Everybody thought it was kind of a dovish statement. Then here comes, Powell being more hawkish. Then you had the Bank of England, just now where, their Bailey's actually more dovish than
Absolutely.
People thought so. It is funny. You talk. It's like they talk both out of their rear end and their mouth at the same time.
Bank of Canada, same. RBA, same.
That's a great observation. So and I did an interview with Bill Baruch from Blue Line Futures a few weeks ago, and he actually made that point. Wasn't talking about every central bank, but he was talking about the Fed, how it's kind of a game of the chicken and the egg, and just kind of they have to play good cop bad cop when finagling through rate hikes, and I think that every central bank is like following that same playbook. It's like they get the market reaction one way, and then they say something else to get the market reaction the other way. And it just kind of nullifies the whole move, so you don't get extreme volatility, right? Because one of the central bank's predominant goals is, as Trichet would say, the stability, right? So you're trying to get some stability in price action And the way you could do that is by navigating through a statement going one direction and comments going the other, right?
Yeah.
Yeah. So anyway,
that's exactly it. I think what they are doing, trying to manage that not to let the expectations run too wild.
yeah. I could see that, and that makes a lot of sense. And that's one of the arguments when you guys, I say you guys, I should say when people just in general argue against central banks, and then they have an argument for, like, and by the way, that's my view on Bitcoin while below 40K. While they people argue about cryptos, one of the things that, like, cryptos and this type of currencies, there may not be a central bank, but there's also no central bank to offer stability to the crypto market, and that's one of the scary things about cryptos. That's why I'm always hesitant to believe that crypto will end up being a form of money somehow, because it's really hard to be like, I think about, like, those countries that have what's the country that has all their money in crypto right now?
El Salvador.
It's El Hodlador.
Yeah, I mean, that's funny, actually. But imagine that, like, your money, on a global scale loses, like let's just say in the last few months has lost 35% of its purchasing power. Like, in the last, like, and your government has nothing, you don't have anybody that can control that. I mean, that's scary to me. So anyway, so central banks, I guess, to say they are actually, able to offer some sort of stability there, as far as price stability. But ECB is starting. It is time. I know. You have a guest, Ben Maldonado's here. He's always really, really interesting to hear. So you guys make sure you stick around for that. Kman, Ryan, Stelios, thank you for all of your analysis this morning, especially following the Bank of England. It's nice having boots on the ground, with the Bank of England there, and hearing what you guys have to say in your opinions. So we will see you guys later. Dale, have a great interview, and make sure you guys take advantage of the $1 for 10 days. Try out ForexAnalytix. Jump in our community. We have probably one of the most active trading communities in the world right now. So see ya. Thanks.
Thanks, everybody.
Thank you, guys. Thank you, team. Thank you, Kman. Ben, welcome back to F.A.C.E.
Hey, Dale, how are you?
Okay, buddy. So I want to warn people that this, to get the children out of the room. And if you're squeamish, you also want to leave. And if you only want, good news, everything's going to be okay, this is not the interview for you. So go ahead, Ben.
Hey, Dale. Yeah, thanks for the disclaimer. I come bearing gifts. Let's say.
Yeah, so I'm just telling people that prepping them for it. I mean, I think people feel it in their bones. So go ahead. Let's get into your cycle work, Ben. Always great to hear you. I will acknowledge a lot of the things you talked about, and gosh, I remember you being here in the room during F.A.C.E. and beans were trading around 12, and I asked you if you thought that was it, that pullback, and you said yes. I think maybe it got 11.50 or something, took out 12 a little bit, but smoke and beans are where, $15 now?
Yeah. I mean, I think we'll get into the grains, but short term, I think they kind of made a peak. I was looking for a high on Monday. The high came yesterday. But the overall theme is, inflation is not going anywhere. And all the theoretical things that we've been worrying about, the cycles are pointing to them coming to fruition this year.
Yeah, well, it was a lot more entertaining and fun talking about them being something in the future.
That's right.
Than being right in the middle or the beginning of a lot of these things manifesting. So anyway, maybe there's some steps that people could take that might be important for their families and for them. So I'm going to shut up now, buddy. And
No, absolutely. I think that's the important point.
yeah.
So let's look. Here's what we're going to cover today. I've for those who've heard me speak before, I'm going to touch on the major cycles that we're being affected by right now, because I believe they're the driving force of everything that's going on. It's sort of the background weather and the frequency, and it gives you the idea of what is most probable to happen. So we'll cover the major cycles, which include the epic cycle and the 1970s analog that we're following. We'll go over the 2022 themes. Part of the theme is new directions, and we've already seen a couple of major ones in the first quarter that we'll review. I'm of the mind that, like the 70s, we're going to experience another energy crisis, and we're in the middle of it, and it's only going to get worse. And then, as I said, inflation is here. It's not going anywhere. So I want to highlight some of the markets that and ways you can protect yourself and benefit from the inflation that's here and coming.
Yeah, the Fed could raise rates 100 times, and I don't think it's going to affect something that depends on weather and not the Fed.
That's true. And that we're seeing that, or the availability of fertilizer, like in the grains, which we'll talk about. Yeah. So the epic cycle is a 400-year cycle that we are currently in the last several years of. The reason why this is important, and you can see it in your everyday life, is this cycle was about the development of and the organization of societies and countries and the world, essentially, where large centralized institutions gave us support and structure and sort of governed how we operated. Well, we're currently at the end of that cycle, and these institutions are failing, they're fragmenting, and people are seeing it every day in the things that they use, and the things that they used to depend on, they can no longer depend on them. And in my opinion, we hear the term the Great Reset. This is the real Great Reset, not a group of people in Switzerland trying to control the world or whatever the conspiracy theorists
Those gnomes.
This is really the Great
Reset. It's the gnomes, man. Or the Trilateral Commission. Or you know what?
What's that?
Yeah, you'll hear it in this country now with all the racism in the country. It's who were the Rothschilds? Build-A-Bear, Anthony. Yeah, the Bilderbergs.
There you go.
All right.
So.
Just one question. Interesting. Why was 1616 a seminal year?
It's just the way where the cycle went. I have no idea why 1616 and not 1614 or 1618. Okay. It's how the cycles fell.
There you go, Curve.
Here's some examples of things that we used to rely on, used to believe in, used to have faith in, which are now failing.
Yeah, you nailed the Fed a few years ago before all the scandals and everything.
The scandals and now their ineffectiveness is going to be exposed. And that's what I think the next big thing is. But anyway, there's those things. We've reviewed them before. You can people can probably add others to the list, because every day we're seeing more and more of these institutions fail us. The 70s cycle, I can sum it up in that, the cycles we're going through now are the same as we experienced in the 70s. And while they don't exactly repeat, they do rhyme. And we've seen a lot of the rhyming. We had a Republican president who was not very popular, Richard Nixon. We had Donald Trump, who was a Republican president, who was not very popular and very polarizing. And here's some of the things that happened, in each of their reigns. And you can see it's, a lot of similarities. What we're currently experiencing is what happened after Nixon. We got Jimmy Carter. Well, what happened after Reagan? After Trump, we got Biden.
Yes.
And the similarities just continue to come. Like recently, with the Canadian truckers and their protest. Did you know that there was an Australian trucker strike in 1973 and 1979 that had a dramatic impact on policy in that country?
Like what's going on now.
Exactly what's going on now. The other one is, while our athletes are going to be at the Beijing Olympics starting on Friday, no government officials, no diplomats are going to be there. So we are boycotting, in a sense, those Olympic Games, just like Carter boycotted the Moscow Olympics. I believe we're in the early stages of the second leg of this energy crisis, and the 70s were obviously famous for a major
Gas
energy
lines.
crisis, gas lines, odd license plate numbers for getting gas, all that stuff happened. The stagflation, I think, is also going to really become not theoretical this year, but become reality. And we're going to see that. So given
could the 2020s, Ben, make the 1970s look like the 50s?
Wow, that would be something, wouldn't it? I
mean,
mean,
magnitude and everything.
Yeah, I mean, we'll talk about this in the outlook here. You can see the themes for 2022 are not great. Limitations, shortages. We're going to continue to see them. We've seen them in semis. We've seen them in workers. We're going to see it in food this year. It's not going to be theoretical. We're going to see it in food. Right now, what's happening in agriculture is farmers are not growing things because they can't do it profitably because the cost of fertilizer has gone through the roof. And so we haven't even seen the effects of that yet because it's going to affect this year's plantings. So we're going to have, I mean, that's a reality. Other things that are going to happen, we're going to have shortages of is growth, liquidity, economic things that we need, to have good markets and a good economy are not going to be there. So that's the background weather. While it's good for commodities, right? When you have shortages in commodity markets, that's really good, right? Prices go up, right? If demand is stable and supply is down, prices go up in commodities. So this is going to be good for commodities. It's not going to be good for the economy, and it's not going to be good for society. So that's the first one. The second one I think is really, really important, and Steve would appreciate this because Steve's been talking about this for years. I think we're finally going to have a realization that this model of eternal growth not going to work. All modern systems have been built on this principle. Sort of the more philosophy is based on eternal growth. And that it's not going to happen. And the cycles are set up to where people are going to start realizing that this year. Because what if Dale, what if we all known all our life that has been told us is that the future is always going to be better, right? The next generation is going to have it better than the previous generation. Yeah. What if that's not true? Well, what if people don't believe that anymore?
Yeah, like the millennials now,
right?
Yeah,
what it could be.
I used to believe it.
Yeah, I know, but you can see that it wasn't possible true. That it's not true, right?
Yeah, I'm sure there were, in all generations that some make it, some don't. Everyone has highs and lows and cycles, but yeah, it's a little different. I guess younger kids right now, they don't want to own a house. It's a lot of responsibilities. They'd rather rent. But the growth of consumerism, is more, not about age or it's the demographics are working against us too. So,
no question.
So it's consumption. Are you saying that people are going to pull in their horns and not spend because of what they see happening at the grocery store and with their utility bills and so they don't have as much disposable income and there are no government checks coming anymore?
I think that's a true statement that you just made. The bigger issue here is that if this belief in that the future is not always better becomes pervasive, we could have an emotional crisis. Yeah. Where there's sort of hopelessness, right? Yeah. People don't, why are you going to live for tomorrow if tomorrow's going to be worse? Yeah. So that's a possibility. And the way the cycles are positioned now, it looks like the next crisis is going to start in March. some point in March. I don't know what it's going to be. I don't know what it's going to be about or how they're going to do it, but March looks to be the next time. The other thing
I mean, we have the situation here with Ukraine, Ben. In the epic cycle, is there a war cycle feature in it as well?
Well, as the key thing is, as the societies disintegrate, right, as the infrastructure and the things that they've depend on and the organizations that they've depended on to provide certain things for them fall apart, what's human nature do right then? You look for somebody else to blame, right?
Yeah.
So you blame your neighbors,
right.
You blame people you don't like, people who are different than you, people
other nations.
That's right. So it could lead to that sort of kinetic conflict between countries and societies and within societies. The other thing about this myth of eternal growth being shattered is we have to watch for frauds are going to be exposed. And it happens in every cycle. Like if you remember in the .com crash, that's when Madoff got exposed.
Yeah.
Right as that started unfolding.
Enron
kicked off another one. Frauds are going to be exposed because if people start doubting this eternal growth thing, they're going to start looking deeper into things and they're going to find the frauds. So that's another sort of signpost to look at in this part of the cycle. The next one is volatility. And I think, everybody understands volatility in the markets, but there's also going to be volatility in society. And what do I mean by that? Is that there's going to be sudden changes in the directions we go. Like we're going to be going one way on an issue in one moment, and then we can change suddenly and quickly to going in the opposite direction. And I'll give you a couple examples of that in the next slide. There's going to be emotional extremes. The good news for traders who have a system and who have discipline, this is going to benefit you, right? The last few years, matter of fact, the last 13 years, all you had to do was buy the dip and you were a genius and you made money. And if you stuck to your system and you tried to, sell resistance and buy support and do all this stuff that disciplined traders do, who've been through bear markets do, you underperformed. Well, I think that whole thing is reversing. So having discipline, having levels, having, risk reward requirements when you enter a trade and exit a trade, those are all things that I think are going to come back in vogue. Power, might, and violence. This is all about, I think, controlling the narrative. We're going to see much more efforts and more sort of extreme efforts to do this. Also, this has the earmark of total intolerance for any dissent, or any dissension at all will not be acceptable. And you see what's happening to Joe Rogan. You can see this stuff ramping up, and it's gonna ramp up more and more throughout the rest of this year. So that's the lovely picture that the background weather is showing for 2022. What do we do with it now? Well, let's look. New directions create new opportunities. Here's a couple in the first quarter that you can already see evidence of it and things happening with COVID policies and attitudes. I believe that the authorities are no longer going to be able to use COVID as an instrument of fear to get people to do things. I think that's done. We're seeing companies.
They're in the streets.
And they're changing their policies
everywhere. Yeah.
If you look, there's Switzerland, Czech Republic, Denmark, Sweden, UK, Netherlands have all gone back on restrictions or lifted them entirely. A company like Starbucks, which is not the epitome of conservatism, no one would accuse them of that, scrapped the vax mandate. They scrapped it.
Yeah.
And it's all happened, about mid-January when these cycles shifted, that we started to see this change in attitude. And I think we're really transitioning from a pandemic where there's a crisis to an endemic where we're just going to live with it. We're going to live with it. We're going to protect the vulnerable, and then we're going to let people live their lives again. Now, the powers that be, the power, might, and violence that we talked about, they're going to push back on it, and they're going to try to continue to control, because it's about control. But I don't think they're going to be able to use COVID, which is why I say the next crisis starts in March. Don't know what it is, but that's when the next one is. Another major change in direction is not only Federal Reserve policy, but central banks all over the world. And Blake said this yesterday, and I typed in the chat, I said, oh man, you're stealing my thunder for tomorrow. The party is over.
The punch bowl taken away.
It's gone. I mean, the cops are there. If you haven't slipped out the back door where the kegs were, you're going to get caught, right? You got to.
Would you bail me out, bro?
Yeah, give you the quarter to call me. So the party is over, and we have to understand that. If the last 13 years you did something successfully because the Fed was doing something, they're doing the exact opposite now. Central banks are doing the exact opposite now. So if you try to do the same thing, you're going to get destroyed. You know, the 13 years of easy money is over. We're moving to the next phase. I believe it's the sell the rip versus buy the dip, because distribution is happening.
Well, at least sell the rip will work at times where it never worked for much.
No,
prior.
it didn't. No, it didn't.
Yeah,
it really didn't. So the key is, you know, when the market changes,
we're going to see volatility in currencies too. So
absolutely. And the key is when the market changes, you have to change. This is the thing. It's telling you it's time to change. You know, here's a couple quotes. You know, Starbucks got rid of their requirement. England removed all requirements. Switzerland. I mean, it's happening one after another. You know, we talked about that, but there's, you know, quotes and things from some of the people. Here's the Fed quotes. I mean, they're telling us what they're doing. We may not want to hear it, but they're telling us. I mean, look at Bullard's quote. We don't want to disrupt the markets, but remember, anything before a but means disregard everything I just said.
Discount it all.
Right. We need to keep inflation under control. The economy is ready for interest rate increases to control rampant inflation. I mean, they're telling us, so we got to listen. Energy crisis too. I do believe, like in the 70s, we're going to experience another energy crisis, and are experiencing it now. Here's a couple of facts. Couple from the last.
My heater went out last night.
There you go. You have your own.
I'm doing an interview in an electric blanket.
So peak supply is happening before peak demand. That's a problem. Again, just simple economics. These green policies and ESG mandates are really, really affecting supply.
Here's my energy crisis, bro.
Last year, oil and gas discoveries were the lowest in 75 years. 75 years.
Yeah.
And I think government policy mistakes are only adding to the problem. You know, like whether shutting down coal plants or shutting down nuclear plants or canceling expiration leases. And the brilliant one that Joe Biden did was the Strategic Petroleum Reserve release. Let's see what happens when you do that. Historically.
I figure, right. Backfires.
I mean, it's not good.
Yeah.
It's not good.
Yeah.
So
I'm thinking there might be one interruption in the bull market if Biden can cut a deal with Iran and we get Iranian oil back on the market.
Yeah, but is that going to solve the problem of this?
No,
which is
just
discovery. Look at the levels of discovery. Just comparing.
No, long term, not at all.
It's a real problem. If we had the infrastructure in place to do the green energy and they were doing all these things, you could say, okay, we're going to make that transition. It's not there yet. The demand is still going to be there for this, the fossil fuels, but the supply is not. So
look at that production in 2020, and then or 2019. It was pretty good until the Saudis broke the frackers and they all went BK. And what a strategy! Yep. Yeah. Okay.
So here's crude on a monthly basis. We are currently at at, I use these squares to sort of define price action, and we're currently at resistance. So I wouldn't be surprised if we get some sort of pullback. But again, this is a monthly chart.
Yeah.
It's not bullish. Where did pullbacks come? Site of previous highs.
Yeah.
Right? Previous lows over here. So, crude looks bullish. Doesn't mean it's going to go up today or next week. This is big picture stuff here, monthlies. Gas is another one. We talked about gas earlier in the year, made a nice trade there. It's bullish, longer term bullish. It's just breaking out of this base. The next move is we get above this, this like 540, 550 area and can settle above it. We're going, I think, to all-time highs.
Nice.
Let's look at the background weather for financial conditions, right? The Fed is hitting the brakes. There's no question about it. You can see this is the U.S. financial conditions indicator or financial conditions index. Well, everyone can say, oh, man, look, we're still in easy money. You got to look at the direction and the rate of change, right? This thing's heading down.
Yeah.
And if this is the reason why we just had that huge run, then you got to change your strategy. The other thing,
think we're having a failing rally here? I just heard one comment. I know I'm taking up some of your time, but at the hedge fund conference last week, hedge fund trader woman said on that spike low a week ago on Monday, I'm so relieved. Don't you think that low is going to be taken out?
yes, I think
And
probably
is it going to be taken out before we make a new high?
That's a good question. I think the possibility of a new high gets more remote every day while it's still there. Maybe we could do some kind of false break high.
Okay.
I'll show you the pattern that we're following.
Okay, there's addicted to debt.
Yeah. So the Fed in this last recession, this COVID crisis, we've gone more in debt. The fiscal deficits were greater than all the previous recessions in 1980 combined. And we're getting the trap here is they need more and more debt to get the same response, and they're not getting the same response. They're getting a weaker response every time because you're piling on additional debt, and it's I guess the patient's getting numb, from all the heroin. So this is a problem, but we have to be cognizant of the fact that I think what's going to happen too is that the Fed, the next crisis we have, the Fed's going to come in and they're going to really make the liquidity that we just had look like it was, a BB gun. And that's when inflation's going to go nuts, and the markets will too. Here's something I think it was yesterday you had someone on who was talking about correlations.
Oh yeah.
Here's a correlation between the Fed balance sheet and S&P. Remember,
tight.
one is perfect correlation, right?
Yeah.
0.933.
Yeah. Just had that little thing, a little deviation between 65.
Yeah. But think about this. If the Fed is reducing their balance sheet, where does
taking profits?
Yeah, they're taking profits. What does that mean for the markets?
Yeah.
If the correlation holds, it means markets are going to go down too.
Okay.
Bubbles everywhere. The latest example, you'll love this. The metaverse, right? People are buying things in the metaverse because it's going to be the next.
They're buying NFTs. Yeah.
They're buying NFTs. They're buying real estate. They're buying yachts. They're buying Gucci shoes, virtual Gucci shoes. Yesterday, I heard that that metaverse mortgages are being issued to buy virtual land now. That's the bubble of bubbles.
Yeah.
I mean, come on. I think the metaverse is going to be something someday. It's probably like the internet was in the late 90s. But my God. So let's look at what markets do in a bubble. Right? It doesn't matter what market, the pattern is the same, right? You see this. You see the pattern.
Yeah.
Where are we on the S&P now? Take a look at that. What does it look like to you?
Yeah.
Let's go back.
Yeah. Yeah. Interesting.
Yeah. So here's your failed rally, right? That signals the big move lower.
Yeah. Yeah.
So we're watching now. We're getting a bounce. Do we
Yeah.
go higher? Probably. I don't think the next big leg down starts until the March timeframe, but it could
Yeah.
happen anytime. And I think we get this. And then here's the bazookas from the Fed. and we
So where
that
do you
again.
think the Fed will come in? Is that around 2,600 in the S&Ps?
I think
that
sub
white line?
3,000. Yeah, sub 3,000 they come in.
Okay.
Probably.
Yeah.
We'll see.
Yeah.
I mean, it's all speculation here, but
Sure
this
it
is the path the speculative path we're looking for right now.
Yeah. So it'd be in magnitude bigger than the COVID crash.
I think so.
We're starting to run up against a clock, Ben.
Yeah, let's
so-
just go real quick. We'll
Okay.
run through. As I told you, inflation is here. It's staying. It's not going anywhere. This chart is really interesting. I found this one. It shows periods of inflation, deflation, inflation. This is cycles, right?
Yeah.
We're starting the next period of inflation.
Yeah.
We've started it. We've had the deflation and the run up. I mean, if you look at the 70s, here's that decade right there.
Yeah.
That's what we're going to do. So couple things, inflation markets, gold. I know you guys talked about it. This has been frustrating both bulls and bears, but if you look at it technically, man, we're just consolidating at these highs from 2011 and 2012.
Yeah.
It's bullish. When it's going to resolve exactly, who knows? It's bullish long term though.
Okay.
Same thing with silver. Look at this. Here's the big breakout in silver, right? That we had in 2020. Look at where we're consolidating.
Where
right
would that trend line come in that it broke out of if we went down to tag it? 19?
on silver?
Yeah, that
Yes.
green line you have with that it broke out of.
Yeah, we're at about that. Yeah, I have support on silver now at around 21.
Okay. That line's lower than 21, but
Yeah,
okay.
yeah. It's
All
right. It's in the upper 20s area, I think is.
You
right
mean
in
upper
there.
teens?
Oh, you're talking about where? Down here?
I don't see your cursor.
Oh.
So you had a trend break that we came out
Here.
of. If it came, yeah, that's it. So if it came down to test the line,
It's a little
in
over
the next
20.
few weeks.
Little over 20.
No, go to your right.
Oh, down here.
Yeah, if it
Yeah,
tested that, where's
If
that?
it tested that, you're in the teens. Yeah, you're in
Okay.
the teens. Yeah,
All right.
for sure.
Back up the truck.
Copper.
Yeah.
Triangulating
3 drives to the top.
right
Just kidding.
around previous highs, man. That's bullish.
Yeah.
Copper's
It is.
bullish. Long term
It
is
is.
bullish.
Yeah.
The grains we talked about, these things are gonna go higher.
Yeah.
I think we're gonna do a little bit of a correction, a little bit of pullback after this last run, but they're bullish.
Yeah.
Long term bullish.
Russia's and Ukraine's a big wheat producing area. Okay.
There's corn,
Yeah.
bullish.
Okay.
Beans just hit
Real
resistance yesterday. Probably
Real
pulls
bullish.
back, but it's bullish, man.
Yeah.
We're going to all-time highs here.
20s.
Coffee. Nice run up.
Everything.
Consolidating above the previous highs. Bullish. Long-term bullish.
Okay.
Sugar, same thing. Pulling back, but bullish. Cotton, up and out.
Going to be wearing a leisure suit made out of polyester.
That's right. Cotton's going to be too expensive.
Back to polyester, John Travolta.
The one thing I'll show you that's going to go down,
All right. The bottom.
30-year treasuries.
Where does that blue line come in underneath it?
Down here,
Yeah.
yeah, that's pretty low. I think you can get down. I think you can get down to here, which is around 126 in bonds.
What would that yield be on a 30-year?
I don't know. I don't know what that would be.
Yeah.
I hadn't do the calculation, but I'm
That,
telling
that
you,
would crack the real estate market, don't you think?
yeah. I mean, this bonds are just set to, and this tells you
Yeah.
that inflation's not going away.
And that's a big bubble. That's
Yeah.
bigger than any stock market. Bond markets are bigger than all the stock markets put together.
Yep, and that's popping. Just real quick, we did start a YouTube channel where we post weekly videos.
Oh.
So anybody that wants to hear what we have to say on a weekly basis, there's those videos there on the YouTube
Ben's
channel.
also a very good shorter term tactician and trader in the market. I know he gives big picture stuff here, but he knows how to handle an intraday chart.
That's true. We
Yeah.
do that a lot. So
Yeah.
I mean, listen, the key thing: protect yourself. Don't do what you did, for the last 5 years, 10 years, 4 years, last year. Things have changed. recognize the change, make sure you're disciplined.
And Ben walks the talk, because I was talking to him the other day about this presentation, and he said, Dale, can I talk about what I see? And he told me he has about 4 cans of beans, a few cans of tuna, and a sack.
A lot of peanut butter.
Yeah, a lot of peanut butter. So if you want to learn how to get prepped for all of Ben's scenarios, you just model yourself after him. And Ben, you know what? Even though it was, a lot of, uncomfortable things and times that are coming, it's all in our head because there were times when things were great for everyone else. And if your head wasn't right, it wasn't great for you. I could testify to that at times.
Mm-hmm.
And there'll be times where it's more difficult, but if you keep the right attitude, and you never know if you have faith till you need it, you could still, find peace and happiness. So that's my hope for everyone that's listening to this.
I agree.
Buy some peanut butter, get long commodities. And if you're a trader, this is not hell. This is nirvana.
Absolutely.
So, if you have trading skills, this is what you've been preparing for your whole life.
This would be the perfect environment. You'll be able to make money. You'll be able to support your family. You'll be able to take care of the people that are important to you. This is, as Dale said, this is going to be our Super Bowl, man.
You're portable. If you're portable, you could go anywhere, right?
Yeah. So it's not terrible. It's not terrible. You just need to be aware, and you need to be ready, and you need to be prepared, and you need to be disciplined. No more, no more bullshit buying the dip for just because it's dipping. Be disciplined and you'll be fine.
Like the Chinese say, what's a crisis? It's danger and opportunity. And the danger is you miss the opportunity.
100% agree.
So, all right, Ben, thank you so much, buddy. My trading warrior brother, and great to talk to you. And we'll be talking in the spring. See what happens. So
we'll see what happens.
Appreciate it, and retweet this interview to your heart's content.
I will. Thanks for having me on, Dale.
Get the message out, buddy.
Take care.
All right. Thank you, everyone. See everyone tomorrow. Remember, more than ever, don't just count your pips, count your blessings. Adios.